What's going on, guys? Happy Thursday. I want to dive into this and go through today's trades. It is a red day recap, but I think I've come down to the bottom of where my struggles have been coming from the last few weeks. It's been a pretty good little stretch, but it's been very frustrating. It's been a little bit of a struggle. It's been a little bit choppy, and every day almost seems like a bit of a grind, right? Because price action's a little bit choppier throughout the summer months. And so it's like, how do we go from here to get this leg back up into a nice summer? So that's what we're going to dive into today. I want to go through every single trade that I took today. It's a max loss day. It is what it is, second one of the month. But again, we need to go through and actually review these things, adapt, see what I can do going forward to, again, like I said, turn this month into a nice green month. So let's go ahead and dive into all of it here and just see what pieces of the puzzle are we missing. That's exactly what we're going to go over. So let's go over all the trades here from today. This should be pretty informational for all of you out there. I think you're going to hopefully learn a thing or two from this, because I like to be transparent and walk through stuff like this. I think it helps everybody, not just myself, but everybody, because you can learn from my mistakes. You can learn from my adaptations out there in the market. Now, like I said, max loss day, it just seemed like it was loss after loss after loss. Was unable to get any traction whatsoever. So I want to walk through all of them, starting with number one on VLCN. Now, the one thing that I'll say first is I've noticed a trend. Whenever the market's hot, I can really zone in on the 1 minute time frame and look for those nice 1 minute pullbacks and the 1 minute setups, and it works fine. But the issue, the market slows down, opportunity is fewer and further between, choppy, and so using the 1 minute time frame just exposes you to these small trends, which gives you the small picture, I'll say, setups, and again leads to this chop that we're seeing. And so a lot of this is very preventable stuff, which is good. It means it's an easy fix. Now that I've sort of recognized what the issue was, I've spent the last hour and a half just looking through these setups today, trying to figure out where am I going wrong? What do I need to do tomorrow to turn it into a beautiful green week? Because right now it's a small green week after today. I had a nice day Monday, Tuesday, Wednesday. Then today we come in and max loss. Boom. So what do I do going to tomorrow? Well, the big thing that I noticed is top-down analysis. I am placing way too much emphasis on the 1 minute time frame and ignoring the signals being given on the 3, the 5, the 15, the daily, all of my larger time frames, pretty much ignoring those signals because of the lack of opportunity. I'm trying to almost, create opportunity in a way. Now, so I want to start here on VLCN. We'll look at this one first, and I want to look at both time frames. And we'll sort of dive into exactly what I'm talking about here, and you should start to see exactly what I mean. So I want to start here by looking at the 1 minute time frame on VLCN. Now, not bad at all. I wasn't too upset with these setups here because it was overall break even here for me trying to play it out of the open today. You can see here, took the nice higher low or lower high breakout, took the break to the high, didn't get any follow through, faked out, so I went ahead and cut it at entry. On the next one they're following, we saw these higher lows form after the bell. I try to take it for that big break higher. Really, should I have taken it here? I liked it personally, and if it would have made that big move like I was expecting, then we'd be sitting very nice. So you can sort of go either way with it here, but this also was pretty much break even, so this one I wasn't too upset with. As far as the setup goes, I will say in this market, probably leaning more towards the side of confirmation is the way to go. So looking for that break to the highs first may have been the better choice, but even that, I like the setup here. I have nothing to say about the setup in terms of any faults. So this setup here in VLCN, I'm fond of. I like, nothing wrong with that. But here's where stuff gets a bit interesting. Let's go and dive into DPRO. And this is where that top-down analysis starts to really show itself here. Now, I had a really good trade here to start. And what I want to talk about here is the pullback that I took back here off the 5 and 12 EMA. Again, per my strategy, typically I'm taking pullbacks within the 5 and 12 EMA, riding trend. And you can see here, took the pullback between the 5 and 12. And guess what? I get stopped out. I take the pullback right here, risking the bottom of this candle for the curl back higher, because we can see the big wick off the low here. I'm like, buyers are coming back in. I'm looking for that curl back up through its high. And of course, we don't get that here. And again, this is where that top-down analysis will come into play. I'll show you the 5 minute time frame here in a second. You'll see exactly what I mean. Now, looking back here prior, had a really nice trade here. We can see higher low. And so we have this really nice sort of tightening range here formed. And I take the pullback off of the 12 EMA. And I get a nice move here from the lower 6s to about 6.5. And so, again, not a bad play here at all. I was then looking for the break of 660 over the previous high to play this to the highs. And we didn't get that till later. But here's where this gets interesting. So flip over to the 5 minute time frame and look how this changes. Now, this still looks fine, right? This still looks perfectly fine. But what does not is the reentry here over a time day. Why does this not look fine? Well, look at the massive topping tail off the high, which was there. On the 1 minute time frame, you're not going to see that. The 1 minute time frame tells a completely different story. You don't see that here. Right? This looks all fine and dandy. We see this and it looks good. But the second you flip over to the larger time frame, you're like, oh, well, here's actually the real story here. Here's actually what happened here on DPRO. Here's why this did not follow through. And so again, we've got to look back at this stuff. It is so valuable to look back, review these things, because this is a very easy fix. And again, I think what it is we get sort of spoiled in these hot markets where we're able to trade on the 1 minute time frame because momentum is so strong. We can trade this 1 minute momentum because we've got clean follow through. Price action is forgiving. There's not a whole lot of chop. They just make their move and we get great follow through. And so that confluence of the larger time frame is less of a necessity. But now look at this one here on WINT. The same exact story here. Now, I didn't mind this setup, but the thing is, again, lack of confluence. Now, it's hard to see back in hindsight here at WINT. It's hard to look back in the past tense and see what I saw here in terms of price action. But we have this 1, 2, and 3 candle break to the upside. So insanely strong move here. And I'm looking back at this from pre-market 2. We have that confirmed break over the pre-market high. Take a look at this here. Pre-market high breakout. And so I actually didn't have anything wrong with this on the 1 minute time frame. I loved this setup. We're taking a simple pullback off of this pre-market high and looking for that move back higher. And again, we just didn't get that follow through. This thing pretty much pulled the plug and was done. Take a look. So again, you can see here, it took the pullback off of that previous high of day after it found some buyers. Look for that move back to the upside. And again, we just see sellers pound it. And so as we see sellers hit the tape, I just go ahead and take the exit here. Move on from it. Because again, we're just not finding buyers. And the reason why I took it too is because this thing was getting bought up aggressively here on the 1 minute. It was getting bought up aggressively on the 1 minute, but I couldn't do anything with it. And I took it here and it just never found a buyer again. It faked me out, showed me a side of buyers, and I should have seen the 5 minute time frame. But then looking back at this, even then, I still liked this, is the thing. I still liked this setup. The only thing is I would say to wait for confirmation a bit better when priced. At least wait for a candle to close on the 1. Wait for it to close over that level first. And I think that's what I'm going to actually change going into the rest of the week is I don't have to wait for a 5 minute candle to close or a 3 minute candle to close, but at least look for a 1 minute candle to close off the retest candle. I think that's the one thing because a lot of these pullbacks have just not been holding. They've been just literally pulling the rug, and that's all she wrote. So I think going into the rest of the week, giving that 1 minute candle time to actually close on the retest, and again, using that top-down confluence from the 5 minute is going to be key. So WINT, same story here. Now, this is where it gets even funnier. Look at XXII. Now, this thing halts up out of the open today, and I try to play a little dip and rip. One of my playbook setups, dip and rip. I try to make it happen, and guess what? Lo and behold, it does not happen. And what happens is it ends up giving back like 40% of its move. Now, I take this here in the dip, out of the halt, looking for that curl back to the upside, risking off the bottom of its little gap here out of the halt. And again, fails to do that. Fails to make any bit of move here whatsoever. I'm looking for the pullbacks, take an entry between the 5 and 12 EMA, and we just keep on finding sellers. So again, I just cut it for a loss on this one too. But again, had I looked at the 5 minute time frame and given it that priority, this was another avoidable setup. So I say all of this so that you learn from my mistakes. Because a lot of these trades from today, while they looked good on the 1 minute time frame, this is why it is so important to have that top-down confluence from the larger time frames as well. Another example here that, well, this one sort of goes both ways. OPAD, I actually did not mind, but I would have traded it differently on the 5 minute, which would have probably saved me from taking... I believe I took 2 losses on this morning. Yeah, I did. So it would have saved me. Well, one of them was break even, one of them was a loss, but nonetheless, take a look here. This setup here, again, same story. This one here, per my system, I kind of ignored this as well, and I think because of the lack of opportunity in the market, I've sort of, I will say, forced a bit of opportunity, especially here. Look at this. Per my system, whenever we see a 1 minute candle break to a new high and instantly reject back beneath, it is then invalid. So this should have been a completely invalid entry after seeing how this rejected off that high. But then it broke out to the highs here. I don't mind this entry. I cut it well. I managed it well. I didn't allow myself to get stuck in this knife. But even then, I think allowing that 1 minute candle to close above that breakout level first is the way to go. So, of course, waiting for the close above and then waiting for the retest to close and then going from there as long as the 5 minute time frame is aligned, then I think that's the way to go here. But this is another good example of where this was an ignored move here. Sawed off the highs. 5-minute time frame was not good. You can see here 5-minute time frame. Look at this nasty wick off of this high. Again, it's just one of those things where that 1-minute time frame focus was the issue today. And I think, honestly, looking back at all these trades from today and yesterday, that is the biggest culprit for the performance that I've been having the last few days and the struggle that I've been going through. Now, it's been a green week. And I don't say this to say that it's been a horrible stretch of days, because today was the first red day of the week. We had a good day yesterday. Was able to come back on 8 p.m. with a nice halt and traded YHC well. On Tuesday, I had a nice day as well. On Monday, I also had a fairly nice day, but it's still, right? Still a little bit choppy, where it's like I'm having to, at some point, play catch up throughout the morning. And I think this is actually the issue. We can go back to June and early July, and we had some really good days, like this back here on last week. Boom. It was good. I also had a red day last week on the 8th, so a little bit, 5 days ago? So those are my 2 red days of the month. But I really do want to just stress the importance of top-down confluence. Look, I'm human. I make mistakes. We're all human. And your trading is not always going to be just straight success in a straight line. And what's important is we just stick to our rules every single day. Nobody wants to come in and struggle through it. Nobody wants to come in and get frustrated with fake outs and all of this. But there are definitely... Now, I'm not saying now's a hot market at all. I'm also not going to be saying this is an easy market at all. But there are definitely ways to prevent the amount of chop that we're open to. And I think this is exactly how we're going to go about doing that. Is, again, just making sure we have that extra confluence, checking our daily time frame. Well, we always do that, but checking our 5-minute time frames, making sure we have proper confluence. Otherwise, these nuances are big enough nuances to completely break these setups and open us up to losses like this. The idea for the rest of the week, to take the week into a beautiful green week, is, again, top-down confluence. If it does not look good on the daily, we leave it off. If it does not look good on the 5-minute, we leave it off. And if it does not look good on the 1-minute, we leave it off. The setups that look good on all three time frame confluence, I will trade. Apart from that, I have zero interest touching anything else unless it looks good on every, or at least all 3 of those time frames. So that's my observation. That's what I see. There's definitely some stuff where the 1-minute looked fantastic, but you look at the larger time frame and it's like, wow, clear as day, red flag, stay away. Some of these still would have been red trades, but nonetheless could have been, there was still a good chunk that could have been prevented. And even could have caught wins on some of these had we been aware of this sort of short-term bias with the 1-minute time frame. So in any case, that's a recap of my morning. Thankfully, swings have been cooking for us. And I think swings have been cooking because it's a bigger time frame focus. And I think that focusing on a larger time frame with the day trades as well will help a ton. I think this 1-minute time frame focus has been a really killer lately. And so we'll put this to work tomorrow and just see how it goes. I'm looking forward to it. It's always super exciting to see how we can adapt and improve. And once we get everything going back in our direction, that is one of the most satisfying things I think that you can experience. But until then, all we can do is stick to our rules every day. That way we can fix it and flourish going into the rest of the week, the rest of the month. And of course, as always, make sure to claim your 7-day free trial as well while we continue to work our way through this choppy market and learn as we head back into the hot market going into the fall and winter months. That link will be down in the description below. And that being said, I will see you guys there.